Hey, what's up you guys? This is Junior Trader, and in this video we are taking a look at Nvidia's options data for this coming week. Now, there's a bit of a little bit of nuance here, and what is that is we would have the price chart, the pricing on Nvidia change. It will be just scaled down by the factor of 10 because they are going from into a stock split of 10 to 1 to 10. So one share would be worth equivalent to 10 shares, but that will reduce the price. Nothing would change on P&L and all those things. However, this hasn't gone into effect yet. So which will happen from Monday. So when you will open your broker, you would see the changes already reflected, but the data hasn't changed on the Nasdaq yet. So I pulled this data off of those places, and so it's still going to show you numbers like 1200, 1100. But as we'll go through in this video, I will put this in perspective with what this number would be like. So let's say 1210 will be $121, and $121 and so forth, right? 1215 will be 121.50 cents, right? So things like that. What I'm not sure about how these premiums would look like. So right now it's not going to be, I'm pretty sure it's not going to be like $33 here or $35 here on the premium side for calls and the puts. So I'm not sure how this data would change, but that's something to look for. But I think this will go lower as well, these premiums values, or the down payment or whatever you want to call it, right? So anyway, so guys, in this video, I'll go over the technicals, and if you can check out my video that I did yesterday on my channel on Nvidia's technicals, that is an in-depth analysis. Everything is there what you need to know. I'll still provide a very high-level glimpse here on the technicals, but more will be focusing on the options data and what I think is what type of options range can make money in the technicals fashion, and if certain level breaks, what type of options may go worthless and things along those lines. So with that, let's jump right into it once I let you know that none of this is any financial advice and it's purely for educational purposes. All right, so let's kick this thing off. So what I'm seeing, first of all, right off the gate, well, the black vertical line is the last closing price, and the green are the calls, red are the puts. Right off the gate, what I'm seeing is that there are a lot of calls going into this week expiration at 1150, which means $115 from tomorrow, which are in the money, and I'm pretty sure these were already put in for a week ahead, and because there is no way on Friday there will be so many calls coming in for 1150. First of all, because they are going to be expensive because they are in the money already, right? So these are mostly like long-term running calls that are due expiration, and but yeah, there's a huge spike in the money over there already. $1,200 calls are also in the money, but what I'm seeing, this some spike is at 1,250 and 1,300, which are right now out of the money. So 1,300 means $130 going in from tomorrow, and 1,250 means $125 going in from tomorrow. Now that's where the spike is. Puts, well, the only high puts I'm seeing are at $1,100, which means $110. But everything else is dwarfed by the call. So again, the sentiment is still on the call side, guys. There's still a lot of calls being piled in. So, I mean, all in all, calls are majority here, and still the sentiment is a lot more positive on Nvidia. But let's talk about technicals, right? So I'm gonna pick okay, let me tell you first a little bit high-level technicals if you haven't checked out my NVIDIA technical video, but if you did, that's great as well. And thanks for doing that, okay? So here we are. Well, technically, NVIDIA is still bullish as long as we are above 1158. Structure on this is still bullish. And if we lose that, then also, you can expect some weakness come in, but technically, it will still has a lot of chance to stay bullish or turn bullish again, because 20 days moving average is just catching up. So there may some cool off come as if we continue to break 1158, but I don't think that cool off will last for long before we get into another bounce. and this is on hourly interval. I want to show you that. Yeah, it's just has a lot of room to stay bullish, guys, right now. Yeah, I mean, I'm not seeing much of like it's not actually, the structure is not bearish, right? That's the thing. Again, check out my video that I did on in-depth technicals on Nvidia, that will tell you everything. But yeah, this is structure is bullish even when you pull back to 1150. It is just a pullback in this near term. Yes, some short play may come if it breaks the level of like 1198 or 1184, but that will all be only intraday short play. Otherwise, if these levels are not even breaking, the structure is still holding bullish, right? So yeah, it's better when the structure is overall bullish, wait for the pullbacks and just play the long game. Anyways, so well, that's a little bit of high level technicals. In depth is already I have done in the other video. Now let's talk about some of the things here. So out of the money, the things that I want to pick up. So 1250, where the next spike is, that will be $125 from tomorrow. So 1250 is where it's right at all-time highs. Now here's the thing, I don't really like playing the calls or the puts at the all-time highs or at the support zone or at whatnot. Now things are already stacked against you if you are trying to play 1250 and above, because you will only make money if it goes above that. And what is the premium right now on this thing? Well, it's going for $19, so well, which means, well, technically 1,984. But you to make any money on this, Nvidia price needs to go at 1,270 almost, right? If you're trying to play this now. So that is already above all-time highs, and technically I don't like playing anything that is making money outside the range of at least a top, right? It's already, things are stacked against you. Not saying that it can't happen. Nvidia is still technically bullish, but is it risk-free? Is it like more probable? No. There's a supply zone right now, at least at that all-time highs. So that's my sentiment. It will be better if you want to play the calls, play below 1250, from 1210 to 1250, in between this range. Just because there's a spike and most of the traders are playing there doesn't mean that you also have to play there. Pick the ones which are in that under that range, below at least that, and above the price, because it's only worthwhile if you play the out of the money. Otherwise you are risking too much, and technically you're still not going to make delta difference on the money. Talking about $1,300 calls, so let's go and take a look at that. Okay, so $1,300 call. Now, this one only is what, again, this is for someone who is like, hey, I don't want to risk too much money, but I still want to gamble, right? Well, not technically gamble, but when you are trying to play this outside ranges, that usually is something that you're speculating quite a lot, right? Because technicals are, yes, they're still bullish in that direction, but it's that, can you capture that range, right? Like it's options trading is, guys, a lot to do is with speculation as well. And because technically you're putting a lot of down payment, right? Like you are not trading shares. With shares, you can play the technicals very easily with the stop loss on the other side and size in, size out. But in options, you are like, hey, I'm speculating it's going to go to $1,300 and I'm putting in money, right? So yeah. And above that, actually, then only you're going to make money. But anyway, 1,300. So it's mostly, if you're planning to trade this option, it's only beneficial if there's a reward on the premium that is quite cheap, which is 890. Sure, cheaper than, definitely 1,250 and even 1,210. But can it hit, or it's just going to go to waste, right? That's another problem. So, well, technically Nvidia is in that direction, but yeah, I mean, that's possible if we can get above 1,255. That's all I can say on this one. Yeah, because like the more confident ranges for options trading is from 1,214 to 1,250. But again, have a stop loss regardless, right? Because if the structure break to the downside, they're gonna go worthless. Okay, yeah. So Nvidia's current average range is $50, but guys, this would change going from tomorrow. You won't see $50 moves anymore. They'll be more like just also divided by 10, so it will be like more like $5 move or $4 move. So So put it in perspective. So from 120 to 130, technically that's still in the range as long as Nvidia stays bullish. So yes, structure is still bullish technically, and so calls are, according to how much you want to risk. Calls can be played, but I provided my opinion already. What are the safer calls and what are the more speculative calls, and above what levels will that speculation will a little bit start to become more probable play. All right, now let's talk about some of the puts. So 1200 puts, that's what I want to talk about. So let's go there. So let me just move this line. So $1,200 puts right around here. Not bad actually, guys. I mean, I know it's going to be expensive, but it's not bad. This can, it's just below the structure break even intraday, this put. And, if it breaks below this level, the levels like 1184, 1173, or even 1158 can come. So technically, yeah, not a bad choice, but as you know, it's going to be expensive. 31. Well, at least it's cheaper. Okay, here's the thing: if you want to hedge, technically puts premiums are cheaper right now than the calls. So yeah, that's something to note. Okay, yeah, in the vicinity of the range, I mean. So yeah, $1,200 puts where the spike is. I think not a bad choice by those traders. It's more, there's a chance it may happen. 1150. Let's take a look at that, and let's do that. 1150. This one is a little bit, I would say, out of that range. You have to be really lucky because this comes into the structure break that Nvidia would have to do. The break of the structure at 1158. Yeah, and to make the money, you need to have it, in this range. Then 20 days moving average is coming. If you get into this money in this put, you really have to get out really quickly because things are technically not in your direction. So 1150 is a little bit of a risky put in my opinion. Yeah. And yeah, like $1,100 puts down there where the spike is, another spike is. Let's take a look at that as well. But that's, sorry, $1,100, right? Yeah, I think this is a little bit out of the range as well. I don't think 20 days moving average is going to allow it. I think this is going to go worthless, these puts, $1,100. In my opinion, just my opinion, nothing more than that, guys. So that's that, guys. Gave you the levels below that. If it breaks, what are the probable chances of certain puts or calls to make, or if we break above, right? And what is the safer range as well to trade calls, and the puts I provided that as well. And that's pretty much it for this video, guys, as for options analysis. So if you found this video helpful and valuable, please hit the like, subscribe. I'll see you in my next videos, guys. Take care. Bye.